Let's start talking about the loans.
Yep. So one of the loans that I had in the beginning of my home buying process was an FHA loan. It's a loan for first time home buyers. It also is a loan for people who don't have a decent credit score. I think it's around 660 and up. There is a loan amount that you have to. There's a cap. I think it's somewhere between $325,000 and lower in Texas.
Yeah, it depends regionally.
Right. You can put as little as 3.5% down, and there's going to be a MIP, which is a monthly additional insurance premium that they just want to make sure that you can, pay your loan if anything happens, foreclosure or default.
Yeah, and it's beyond monthly, right? Because your MIP, mortgage insurance premium, you have to pay it at the origination of the loan.
Correct.
Which I think is around 1% or higher. And then you pay it monthly until you have 22% equity ownership in the home. Then
Correct.
It falls off.
Exactly.
So the FHA loan, it's a loan for first-time home buyers. Makes it easier for you to get it with a lower down payment. But in the long run, it is a more expensive loan. But still a good option depending on what your situation is.
For sure.
So then your second loan, what was that?
There's a conventional loan.
Okay.
Anywhere from 5% down to get this loan. Typically, home owners, they want to put down that 20%. There also is a PMI similar to the MIP for the FHA, but you have to have a credit score of about 720 and up, so good credit. And there's also lower interest rates with your conventional loan. Anything else you want to
add? Yeah, and then the PMI, depending on your credit score, it's relatively low. I mean, you can get a PMI on a $300,000 house for under $40 a month if you have a really high credit score. And that falls off after your home. You have what is considered 20% equity versus your balance. Right. So if you bought your home for $300,000, the appraiser valued it at $325,000, right? And then you put down 10%, right? You'll be very close to that PMI falling off because even though you only put 10% down, that puts you at roughly about 18% equity into that home. So you could actually contest it with your lender and then have that PMI fall off if you reach 20% equity of the home's value versus the balance that's left.
Exactly. Another loan would be a VA loan. So with the VA loan, you have to have served in the military. I think it's 4 years. You don't have to put anything down. There's no credit check. There's no limit. There's also, you don't have to put down any earnest money. It's probably the best loan out there. So if you are in the military, I would definitely use the VA loan.
Yeah. Again, it's only limited to military veterans, so it wouldn't apply to most of you. But just the one caveat to that is that you can only have one of these open at a time. So if you're living in a home with a VA loan, you can't buy your second home with a VA loan. You have to sell that house and then get a VA loan all over again.
True.
And then the fourth loan that you can get is a hard money loan. And if you haven't heard about it, it's probably not for you. That's typically only set aside for investors. So an investor will take a hard money loan because they need some short-term money to buy a house that they need to cash quick, fast, in a hurry. And that's pretty much the hard money loan. And then there's this fifth thing that actually falls under, I believe it can fall under conventional loan. I'm not sure if it falls under the FHA loan, but it's when you get a loan under what's called manual underwriting. So what happens with that is you can have no credit score because you just have no debt, you don't have a credit card, you don't borrow anything, and you work with a lender, and they just like, okay, let's just look at the facts. Let's look at what's in your bank. Let's look at your work history, and then they'll work with you and give you a loan just based on your assets and your work history and your income versus a credit score. So that is an option for the people who just want to be completely debt free and are worried that can affect you being able to buy a home because you lack a credit score.
That's dope, man.
Yeah. Yeah, man. And that's pretty much it when we talk about the ways you could buy a home with a loan.
Exactly. And a lot of times, I think there are, P2P loans that people could access.
Yeah, that's similar to a hard money loan.
Yeah, that's similar to a hard money loan. But Prosper is a tool that you guys could look at for the P2P loans or hard money loans.
I don't recommend using that to buy a home. So
Right.
you can disregard that. Just go get you an insured loan.
For sure.
Whether it's insured by Fannie Mae or whoever. Just
Right.
yeah. Don't worry about a P2P loan or a hard money loan unless you're buying the home as an investment and you plan to pay that loan off quickly.
Right.
Wouldn't you agree?
No, I definitely agree, but it's an option. It's an option. You know, if I were to say, for instance, I had $150,000, and I wanted to give you the $150,000, maybe I would have a lower interest rate and a better deal than the mortgage company. But
I would rather get that loan through the mortgage company because that loan has insurances.
Okay, that's true. No, I mean you're right.
You know,
You're right.
I no, I wouldn't do that. No, personally, no matter how much money I had, unless like I wanted to buy the home all cash, and I'm just like, man, I got a check coming in. Maybe I'm a rapper or something. I have a back end wire coming in from a show I did that I was going to use to pay for the home. It's not here yet. Hey, let me borrow. But then that's a hard money loan. It's the same thing.
Sure.
So then I would maybe consider it, but the average 99.6% of Americans, you don't need to mess with a hard money loan or a P2P loan of any form. Because in some cases, those could even be predatory if not done right.
What do you think about a construction loan?
Construction loan? Oh,
Yeah.
like they're building a home
They're
from
building a
scratch
house.
again?
Yeah.
Oh, that's cool, man. If you're financially free enough to do that, I think that's a great thing.
Okay.
I wish I could do it.
No, I don't disagree with you. I mean, basically, they give you the loan, and it works on a draw schedule, which is, you pull from that loan to pay your contractor. But you have to pay it back within, I think it's either 5 to 10 years, so it's a little quicker.
Yeah, I know somebody that did that. I mean...
But yeah, to each his own. But these are the tools that you could...
It's cool. I like that. I like
yeah.
the construction loan and building a home from scratch. It's just... I don't know. I think by the time I am financially healthy enough to even look into that, I might already be into my next home.
Okay.
You see what I'm saying? So, but if I was like a very wealthy person, I was a millionaire, I would definitely do that.